role. Gold and silver are not exchanged as actual media of exchange in the West, or really even in the East. And as such, governments have done a pretty good job, central banks have done a pretty good job of pushing gold and silver out of the way and allowing politicians to have their true fiat currencies, which is what they want. They don't want any limits on their expenditures, and they don't want interest rates to be a market phenomenon. So certainly Western governments and central bankers have basically achieved that. So why do central banks, not necessarily the Western ones, but why do central banks continue to buy gold? We're reading reports of more and more gold being purchased. It's hard to get accurate data on that. Mm-hmm. And then why do they hold it when it's not a monetary asset? You know, Ron Paul asked Ben Bernanke this. He said, well, it's just because of historical reasons. In other words, why don't they hold diamonds? Why don't they hold barrels of oil on their balance sheet, or bushels of wheat, or wheat futures? You know, it wouldn't have to be the actual commodity, of course. And the reason is that gold and silver have a stubborn degree of moneyness to them. And so I agree with, for instance, Keith Weiner of Monetary Metals, who says, well, the reason they're buying it is because they're looking to shore up their balance sheet with an asset that's not dropping. Look at the Fed's balance sheet. Look at all that QE Treasury debt they bought up beginning way back in 2008, and really almost continuously since then. There's been some lapses, some tapering, but they started it up again in 2020. You know, almost all of that debt is at much lower interest rates than, let's say, current 10-year Treasury yield. So they're having huge losses on their bond portfolio. And so if I were a central banker, especially if I was one which led a bank which had some geopolitical interests, let's say averse to the United States, like China or Iran or India, perhaps, or Russia, you know, I might want an asset that's at least going to hold its value, like physical gold did throughout 2023, if not go up. So there's a little bit of tug of war here. Gold and silver, they never go away. They always have a degree of moneyness. I think we could revert to them pretty quickly in some sort of true crisis. I don't think the dollar is in trouble against other currencies, but if it ever were, that's a real option. And so, you know, why do gold and silver just hold their value over millennia? I think we have to at some point say they're perfect tech. Mm-hmm. They're like the wheel, or they're like fire. Right? Bitcoiners think they came along and created better tech, and you know, you can argue that point, but gold and silver, the immutability of them, it really astonishes me, and they just can't get away with eliminating their moneyness.
Right. Now, you well said, Jeff. With all the chaos in the market, Jeff, where are you putting your money right now? Is it gold and silver or other commodities?
Well, that's where my teenagers are putting their money, because I really want them to have a sense of skin in the game and risk. And I want them to have part-time jobs and understand how you hopefully, you know, it's one thing to make some money. It's another thing to hold on to it.
Right.
And so, you know, I still think there are, I think the next 10 years, let's say, if I had to predict, and I'll put my money where my mouth is in my personal life, I think the next 10 years are fairly inflationary. I don't think they're going to be able to get back to those levels that we enjoyed, or at least ostensibly enjoyed at CPI over the last 20 years or so. And I think several things are bullish for physical precious metals. I think several things are bullish for commodities. And I think several things are bullish for emerging markets, because you know, the part of what's happening with oil, part of what's happening with the dollar, part of what's happening with this Russia-China realignment thing is that the West has been profligate. Its governments have spent more than they brought in taxes for decades. Mm-hmm. And the rest of the world is starting to wake up and say, hey, you know, I don't want to invest in their fiscal house any longer. Why should I? Why should we be under their thumb for settling international payments, for purchasing oil, whatever it might be? We have our own interests, and this Uncle Sam guy is a drunk and a spendthrift. So, you know, there's always this sort of slow Cold War happening with currencies, and people like Jim Rickards have written about it and know a lot more about it than I do. But I do think that I will rigorously limit my own personal decisions to things that I understand. I will never kid myself about what I don't know.
Right.
And so I will stick to things that I understand, like precious metals and maybe some derivatives therefrom, and commodities. And that's about it. And I also think that holding US dollars, in other words, a cash balance, is not the worst thing right now. I understand that inflation is a painful tax to pay, but I do think that the US dollar is going to continue to do well against other currencies for the foreseeable future.
So, Jeff, do you think the Chinese yuan will end the US dollar's dominance, or is it all hype? A lot of people have been talking about this lately.
Oh, wow. That's almost a military question or a strategic question as much as it is a monetary question. I think that's hype, in my opinion. My current thinking on this is from the newish book, came out last year, called The Price of Time by Edward Chancellor, British financial journalist. Brilliant guy. I really love him, really love the book. And he did a pretty deep dive into the Chinese economy, the savings rate, which we hear touted a lot about, Chinese people save more money. And it turns out that a lot of this Chinese economic miracle is not as advertised, at least if you read the one particular section in Edward Chancellor's book. So I'm going to say that's a bit of hype. I would also say that so much of China's growth has been premised on exports to the West. Right. All that stuff we love to buy in Walmart. Now, increasingly, some of that's moving to places like Turkey, Vietnam, Mexico, Sri Lanka. The Chinese manufacturing dominance is waning, is being challenged. But I think, the Chinese government is realistic. They're probably more clear-eyed than ours, and they have a symbiotic relationship with Western consumers. And I think they are just going to have to grit their teeth and bear it for the time being. And I think their own monetary policy, their own fiscal policy, their own demographic issues are at least as bad as ours. So no, I don't think the yuan is going to supplant the dollar anytime soon anyway.